Hey investors! Today I'm diving into some historic events happening in the market. The Dow Jones Industrial Average has just finished its longest losing streak since 1978, tumbling for 9 consecutive days. Let's break down what's happening and why it matters. First off, despite this streak, the Dow did hit a record high earlier this month, closing above 45,000 for the first time ever. But as of December 17th, it closed at 43,449.90, down 267.58 points, or 0.61%. So what's behind this roller coaster ride? One major factor is a shift from old economy stocks, which dominate the Dow, to tech stocks. Investors are moving their money into the tech sector, pushing indexes like the Nasdaq and the S&P 500 to new highs. In fact, the Nasdaq hit a record high just yesterday. But that's not all. There's also growing concern about the Trump administration. Initially there was a lot of optimism, but now there are worries about trade uncertainties and the potential for higher interest rates. These concerns are making investors jittery. Speaking of interest rates, the Federal Reserve's upcoming decision is another big piece of the puzzle. While a rate cut is expected, there's fear that it could lead to a market bubble or increased inflation. Beyond the Dow, other market indicators are flashing warning signs too. The S&P 500 advanced decline line, which measures the number of stocks going up versus those going down, fell for 11 straight sessions. That's the longest streak since at least 2001, indicating weak market breadth. On a brighter note, November retail sales were stronger than expected, but this has added to concerns about the Fed's next move. And in other news, Teva Pharmaceuticals saw a 26% surge in its stock price thanks to positive drug study results, and cocoa prices hit record highs due to supply concerns. Now let's put this losing streak in perspective. The last time the Dow had a 9-day losing streak was in February 1978. Back then, the economic and political landscape was very different. It's a reminder of how markets can be unpredictable and influenced by a myriad of factors. So what should you take away from all this? Markets are complex and often driven by a mix of economic data, investor sentiment, and external events. It's essential to stay informed, keep a long-term perspective, and not overreact to short-term movements. That's your market update for today. If you found this video helpful, hit the like button and subscribe for more insights. Keep investing wisely, and I'll see you in the next one.